Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 2nd of August 2021 and we're publishing our regular morning update where we look at the latest news headlines, economic reports and precious metal prices. Today we see that gold and silver have dipped on opening, but we're certainly expecting more volatility this week due to the rather large amount of important economic data being reported by the United States. So let's take a look. Welcome Monday morning, 9:14 a.m. GMT plus 1, 2nd of August. An overcast but so far dry morning. Now, how dry is the news today? Well, we can see Xi Jinping's capitalist smackdown sparks a $1 trillion reckoning. Chinese stocks jump as Beijing signals more economic support. Let's have a quick look at this. After 40 years of allowing the market to play an expanding role in driving prosperity, China's leaders have remembered something important. They're communists. Xi Jinping smiled and hinted at a policy bombshell that would soon roil stock markets from Shanghai to New York. It was mid-June and the most powerful Chinese Communist Party leader since Mao Zedong was holding court at an after-school club for elementary students in the remote city of Jining. Acknowledging the growing pressure on students and their parents to spend time and money on private tutoring, Xi promised to ease their burden. "We must not have out-of-school tutors doing things in place of teachers," he said. Now the education departments are rectifying this. While Xi's comments went largely unnoticed by global investors at the time, the crackdown on tutoring companies that followed has become the starkest illustration yet of the Chinese president's commitment to a sweeping new vision for the world's second largest economy, one where the interests of investors take a distant third place to ensuring social stability and national security. Call it progressive authoritarianism. So there we have it. This is what's happening in China today. Okay, very quickly, Square to buy Afterpay for $29 billion to tap younger users. That's quite an interesting article, and it's quite a sum of money to pay. Those of us who feel sorry for the banks and how much they've suffered over the years, I'm saying that tongue-in-cheek, HSBC pays dividend after quarterly profit beats estimates. And German property deal heats up with new bid near $23 billion. And London home buyers are heading for the suburbs in record numbers. And this is a trend we see across the world, particularly in built-up areas, inner cities. The pandemic has caused people to think, perhaps we shouldn't be here that long. Perhaps we should have a little bit more space, because if we ever endure lockdowns again, wouldn't it be great to avoid them? Okay, what else is happening? On the BBC, new rules for fully jabbed US and EU arrivals begin. No COVID traces found in railway stations or trains. Look at this, it's all COVID. And pay rise call for privately employed NHS staff. Business news, UK defence firm Meggitt, bought by US giant. The aerospace technology firm agrees to a £6.3 billion takeover bid from US company Parker Hannifin. And we estimate we're going to see a lot more of these acquisitions, because once growth seems to have been achieved, then it's only by acquiring your competitors can you then advance further without slashing prices, which a lot of companies don't wish to do, which is why we've always held the belief, ironically, that in a capitalist society, which we fully support, you eventually lead to what we call oligarchies or monopolies in the end. In other words, companies buy each other and form larger companies and buy their competitors, to the point that you'll have just a couple major traders. Look at Amazon, for example, and what's happening there. Which is why the regulators come in, the competition authorities come in, and to some degree hold back that trend. In the US, a little bit on the Olympics. To be frank with you, we don't see a huge amount economically. A little bit about Trump handing over his tax returns, and suspected Russian hack hit top US prosecutors. Let's go to the financials, a bit more important. Well, dollar index down just below 92 at 91.99. It's weakening just slightly, but no surprise after Jerome Powell's comments last week. Oil prices, though, down $0.75 each. Stocks, well, we reported in our weekly update what happened to the US market. Broadly down, but not a significant amount. Overnight, Asia Pacific closed up quite strongly, really, between, well, almost on average 2%. And UK and European markets are up under 1%, but positive territory again. So, economic news, important week this week, as we highlighted in our weekly update. Today, we've got the market manufacturing and the ISM manufacturing indices and construction spending. And then on Wednesday, we have the services index. So, every day, we've got very, very important economic data being announced, which is why we think there'll be a little bit more of a movement in gold and silver prices this week. The direction, frankly, to a large degree, will be data determined. Looking at gold prices and silver prices, we've got gold at the moment down $5 this morning. As you can see, it opened up, fell back, tried to spurt, fell back, tried to rise, fell back, tried to rise, fell back. So we suspect a little bit of weakness today and tomorrow. But as the data comes out, we'll develop a pattern. As long as the 1800 holds, we're quite content about the medium term for gold. Silver prices, silver's doing a little bit better. It's up 1 cent. Let me refresh the page though. It's been there a little while. Right, there you go. That's how things change. It was up 1 cent. It's now down 3 cents. And again, if it holds above $25, then that's respectable. If it starts to fall below that, not so. Cryptos over the weekend, interestingly, Bitcoin over the last 24 hours, as you can see, fell 4.5%. But have a look at this now. The global market cap is 1.62 trillion. When we started looking at this 2 weeks ago, it was 1.3 trillion. It did go up yesterday, I think, to 1.65 trillion. It's now at 1.62 trillion. And we expect that to rise simply because now Germany is allowing its pension funds and institutional investors to put up to 20% of their investments into cryptocurrencies. Okay, on the weekend, we published the same video, but our weekly forecast on Saturday and on Sunday. If you haven't seen them, please, we've put a link below. It'll highlight what we expect this coming week. And we expect a little bit more volatility this week compared to the last few weeks, if only because of the far-reaching range of economic data, not least of which being the non-farm payrolls on Friday. Thank you for listening. If anything crops up during the day, rest assured we'll be announcing what happened. Please, if you like what we produce, give us a thumbs up. Share if you can. We know not everyone can, but please, if you can. But at least subscribe if you haven't done so, and press the bell sign. Until our next video, have a great day. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.